It began like a legend, a tale of two brothers who believed they could outsmart the entire global financial system. In the late 1970s, while most Americans were struggling with inflation, rising oil prices, and economic uncertainty, two men from Texas decided to take control of one of the most fundamental elements of money itself, silver. Their names were Nelson Bunker Hunt and William Herbert Hunt. Born into oil fortune, the Hunt brothers were not gamblers or dreamers. They were billionaires accustomed to bending markets to their will. But this time, their ambition reached unprecedented heights. They didn't want to just profit, they wanted to own the market. In a world shaken by inflation and distrust in paper money, silver was seen as a safe haven, a tangible store of value. And the Hunts had a plan: buy so much silver that they could control its price, perhaps even challenge the power of the US dollar itself. At first, it seemed like genius. Silver prices began to rise, slowly at first, then violently. In just a few years, the price of silver skyrocketed from $6 an ounce to nearly $50. The brothers' net worth exploded. Newspapers called it the silver rush of the century. But as every empire built on speculation, their success hid a fatal flaw. Behind the scenes, a storm was brewing. The very institutions that once cheered their fortune began to see them as a threat to the global financial order. By January 1980, the impossible happened. The world's richest brothers were on the brink of financial ruin. The price of silver collapsed overnight, billions vanished, and what began as an act of control turned into one of the greatest financial disasters in modern history. Yet the real story isn't just about greed or bad timing. It's about power, the invisible war between private wealth and institutional control. Because when the Hunts tried to corner silver, they didn't just challenge a market. They challenged the system itself. To understand the Hunt brothers' obsession with silver, we have to return to the turbulent decade of the 1970s, a time when the American dream itself seemed to be melting away. The post-World War II boom was fading. The Vietnam War had drained the U.S. Treasury, and faith in the dollar was collapsing. In 1971, President Richard Nixon made a fateful decision that changed the world. He ended the gold standard, cutting the dollar's direct link to gold. Overnight, the United States moved into a new era of fiat money, where paper currency was backed by nothing but government trust. For ordinary Americans, this new era felt uncertain. Inflation surged, reaching double digits. Prices of food, fuel, and housing soared. The 1973 oil crisis, triggered by the Arab oil embargo, sent shockwaves through the global economy. People watched helplessly as their savings lost value month after month. But for the wealthy, especially those with access to commodities, this chaos looked like an opportunity. Tangible assets like oil, land, and metals became shields against the falling dollar. And few believed this more deeply than the Hunt brothers. They had inherited billions from their father, H.L. Hunt, an oil tycoon once considered the richest man in the world. Raised in a world of high-stakes deals and deep distrust of government and banks, the Hunts viewed gold and silver not as investments, but as real money. By the mid-1970s, U.S. citizens were once again allowed to own gold, after decades of prohibition, and investors rushed to precious metals. But gold was heavily controlled by central banks. Silver, on the other hand, was more accessible, used both in industry and jewelry, and crucially, its market was smaller and easier to influence. To the Hunt brothers, this was the perfect storm: a collapsing dollar, an uncertain world, and a metal that could become their fortress of value. What began as protection soon turned into an audacious plan to reshape the global silver market itself. By 1974, the Hunt brothers began quietly purchasing physical silver, not futures, not contracts, but the real metal. They believed that if the world's financial system ever collapsed, only those who held tangible assets would survive. But buying silver wasn't simple. The amount they wanted was colossal, so large that storing it became an issue of its own. Reports claim the Hunts shipped tons of silver to Swiss vaults and chartered cargo planes to move their hoard overseas. At first, their actions drew little attention. After all, commodities markets were volatile, and silver was still considered a niche investment. But as their appetite grew, the numbers became impossible to ignore. By 1979, the Hunt brothers, together with a few wealthy Middle Eastern partners, had acquired over 100 million ounces of silver, both in bullion and in futures contracts. Their reasoning went beyond mere profit. The Hunts saw themselves as defenders of wealth against what they viewed as the corruption of paper money. Nelson Bunker Hunt once said, $1 billion ain't what it used to be. To them, silver was not speculation, it was insurance against collapse. But there was another side to the story. Wall Street traders and regulators were growing nervous. The scale of the Hunt's purchases began to distort prices. Silver rose from $6 to $11 an ounce, then to $20, and finally toward $50. Industrial users panicked, jewelers stopped buying, and newspapers warned that two Texas billionaires were trying to corner the global market. The Hunt brothers believed they were protecting their wealth. To the financial establishment, they were destabilizing an entire system. Behind closed doors, banks, exchanges, and government officials began to take notice. The story was no longer just about two ambitious men, it was about control, power, and fear that the price of one precious metal could threaten the credibility of modern finance itself. And as the decade drew to a close, the silver market was about to explode, setting the stage for one of the most spectacular rises and collapses in the history of money. By the late 1970s, Nelson Bunker Hunt and his brother Herbert had moved far beyond simple investors. They were strategists, driven by both fear and vision, a belief that the monetary system was rigged against tangible value. Their mission was clear: to accumulate as much silver as possible and, in doing so, gain control over its price. But this wasn't a backroom operation. It was a global campaign of acquisition that stretched from Dallas to London, from New York to Zurich. The brothers began buying enormous quantities of silver futures contracts, agreements to purchase silver at a set price on a future date. By controlling both the physical metal and the futures market, they could influence prices on both ends. And as their positions grew, so did the excitement. By mid-1979, whispers on Wall Street spoke of a Texas silver syndicate. Traders noticed that silver prices were rising faster than any other commodity on Earth. The Hunts had effectively created a feedback loop. Their buying drove prices higher, which drew in more speculators, which then pushed prices even further. To protect themselves from accusations of manipulation, the brothers brought in wealthy allies, most notably from Saudi Arabia, whose oil wealth was reshaping the global balance of power. Together, they formed a joint investment group that poured hundreds of millions into silver. The market responded like dry tinder catching fire. In less than 6 months, silver surged from $11 to $30 an ounce. Fortunes were being made overnight. Dealers couldn't find enough metal to meet demand. Even small investors began melting family silverware to cash in. To many, it looked like genius, a perfect bet against a weak dollar and runaway inflation. But beneath the celebration, the world's financial establishment was watching with growing alarm. Because if two men could control the global price of silver, what would stop others from doing the same? The Hunt brothers believed they were securing wealth for generations. But what they were really doing was building a financial time bomb. By the end of 1979, the Hunt brothers' strategy had reached its climax. What began as a quiet hedge against inflation had turned into a global mania. The price of silver, once a modest $6 an ounce, now approached $50, an increase of more than 700% in just over a year. Television anchors called it the Silver Rush. Newspapers compared the Hunts to the robber barons of the 19th century. In the jewelry districts of New York and London, shop owners refused to sell silver products, terrified that prices would rise again before they could restock. In Chicago, at the commodity exchange, COMEX, traders were in a frenzy. Phones rang non-stop, orders flooded in, and chaos ruled the floor. Some investors believed silver could go even higher, to $100 or more. Others whispered warnings of a coming disaster. The Hunt brothers appeared untouchable. On paper, their silver holdings were worth over $5 billion, making them some of the richest men in America. They held not only massive physical reserves but also enormous leveraged positions, loans taken to buy even more silver. They believed they had built an unbreakable fortress. Silver, after all, was real. It couldn't be printed like dollars or manipulated by central banks. But in truth, their empire was built on credit, and credit is a fragile foundation. Banks began to worry. If silver prices ever fell sharply, the Hunts would owe billions they couldn't repay. Regulators, too, were alarmed. Behind closed doors, meetings began between COMEX officials, bankers, and government representatives. The fear was simple: if the Hunts' silver bubble burst, it could take parts of the U.S. financial system down with it. Still, the brothers pressed on. They believed they were fighting against corrupt monetary policy, against inflation, against fiat money, against the system itself. But the system was preparing to fight back. And when it did, it would strike with precision and force, turning the Hunt brothers' empire of silver into ashes almost overnight. It happened fast, too fast for anyone to react. By early January 1980, silver had peaked near $50 an ounce, and for a brief moment, the Hunt brothers stood at the top of the financial world. But within weeks, the illusion began to shatter. The very institutions that had once enabled their rise now turned against them. The commodity exchange, COMEX, alarmed by the Hunts' enormous influence, announced new emergency rules. Traders could no longer buy silver futures on margin, only sell or settle existing positions. It was a decisive blow. With no new buyers entering the market, prices began to fall. Slowly at first, then violently. The Hunts tried to defend their empire. They borrowed heavily to cover their losses, using everything they owned, oil fields, cattle ranches, and real estate, as collateral. But as silver prices plunged from $50 to $30, then to $20, the margin calls came crashing in. Banks demanded more cash, and the Hunts were running out of it. On March 27, 1980, it all collapsed. The day would be remembered as Silver Thursday. Silver prices plummeted below $11 an ounce, wiping out billions in paper wealth overnight. The Hunts couldn't meet their debts. Brokers panicked, investors fled, and the markets teetered on the edge of chaos. For a moment, it seemed the collapse of two Texas billionaires might trigger a broader financial crisis. Desperate, the Hunts called Washington and Wall Street for help. To prevent a systemic collapse, a consortium of banks, under pressure from the Federal Reserve, agreed to a rescue package that kept the brothers temporarily afloat. But the damage was irreversible. Their reputation was shattered, their empire dismantled. Silver trading volumes fell, confidence evaporated, and the global market entered a deep freeze. In just a few weeks, the Hunt brothers went from financial legends to symbols of greed and overreach, proof that even billionaires could be crushed when they tried to outplay the system itself. In the aftermath of Silver Thursday, the world of finance was left in shock. The price of silver stabilized around $10 an ounce, erasing nearly 80% of its peak value. The Hunt brothers, once worth billions, were suddenly drowning in debt. By 1982, they faced bankruptcy. Their losses exceeded $1.7 billion, one of the largest personal financial collapses in American history. The empire they had built from oil, land, and silver melted away piece by piece. Family assets were liquidated, ranches sold, and their names, once synonymous with wealth and power, became a cautionary tale. But the Hunts weren't the only ones who suffered. Thousands of smaller investors who had followed their lead were ruined. Businesses that relied on silver, from jewelers to electronics manufacturers, faced chaos. The U.S. government launched investigations, accusing the brothers of attempting to manipulate the market. In 1988, a federal court found them guilty of conspiracy to corner silver and imposed heavy fines. Nelson Bunker Hunt was forced to sell prized horses and oil interests just to stay solvent. His fortune, once exceeding $16 billion in today's money, was reduced to almost nothing. Yet the deeper consequence went far beyond the Hunts themselves. Their collapse exposed how vulnerable the financial system could be to concentrated power and speculation. It revealed the delicate balance between free markets and institutional control, and how quickly trust could evaporate when greed pushed too far. Regulators tightened rules across commodity exchanges, limiting how much any single entity could control. Silver would never again experience a surge of that magnitude. Still, the story of the Hunt brothers refused to fade. It lingered as a modern parable, a warning whispered through trading floors and boardrooms, that even vast wealth can crumble when it challenges the invisible architecture of global finance. They had tried to own the world's silver. But in the end, silver owned them. More than 4 decades after the collapse of the silver market, the story of the Hunt brothers feels hauntingly familiar. Because the forces that drove their rise, and their fall, never really disappeared. They simply changed form. In the 2010s and 2020s, the same pattern resurfaced across new markets. The cryptocurrency boom echoed the same psychology that fueled silver in 1979. Fear of inflation, distrust of central banks, and the dream of escaping a manipulated financial system. Bitcoin became the new digital silver, a hedge against fiat currency and government control. But just like the Hunt's silver, its meteoric rise was followed by violent crashes, moments when optimism collided with reality and fortunes evaporated overnight. Then came GameStop and the Reddit rebellions, where millions of small investors united online to challenge Wall Street hedge funds. They called it a revolution, financed by the people, for the people. But once again, the same invisible dynamics emerged: a small group driving massive price swings, platforms imposing restrictions, and the market correcting itself with brutal precision. It all felt like déjà vu. The technology was different, but the human story was the same. Greed, fear, and belief clashing with structure, rules, and power. Even commodities haven't escaped. The 2021 silver squeeze, coordinated through online communities, tried to replicate what the Hunts had done decades earlier: buy up silver to push its price higher. But this time, regulators and exchanges were ready. The system had learned from 1980. And yet, the dream persists. The desire to control value, to beat the market, to hold something real while the world prints money out of thin air, that instinct remains deeply human. The story of the Hunt brothers isn't just a historical episode, it's a mirror. A reflection of the same eternal struggle between freedom and regulation, wealth and restraint, vision and delusion. Markets evolve, technology changes, but human nature does not. And as long as people believe they can outsmart the system, the ghost of the Hunts will always hover over the next great bubble. The story of the Hunt brothers and the 1980 silver collapse stands as one of the most fascinating and cautionary tales in the history of modern finance. It's a story about power, ambition, and the illusion of control over something as unpredictable as a global market. The Hunts believed that by cornering silver, they could protect their wealth and outsmart the monetary system they no longer trusted. For a while, it seemed to work until it didn't. Their downfall serves as a timeless reminder that no fortune is immune to the laws of economics, and no strategy can outpace the combined force of market psychology, government regulation, and public reaction. The collapse of silver in 1980 wasn't just about two men losing billions. It was about the limits of human greed and the fragility of financial empires built on speculation. Today, echoes of that event can still be seen in the digital age, from cryptocurrency bubbles to meme stocks and commodity surges driven by online movements. Just like in 1980, enthusiasm and fear can still move billions in minutes. But the Hunt brothers' story reminds us that when markets lose touch with reality, gravity always wins. As investors and observers of history, we must ask ourselves, are we learning from the past, or are we simply repeating it with new names and new technologies? If you enjoyed this journey through one of the most dramatic episodes in financial history, make sure to subscribe to the channel. Here, we explore the hidden stories behind money, power, and the people who changed the world for better or for worse. Turn on notifications, because the next story might just change how you see the economy forever. Subscribe now and don't miss the next great financial mystery.